Hey guys, how's it going? It's Andy from Magoo Investing. Happy Thursday. So in today's video, I wanted to talk about one of these stocks that I had originally described as being one of my least favorite stocks in the overall stock market. And I kind of forgot about it for a while. It's probably been 6 to 9 months since I've talked about it. And during that time, the stock has increased significantly. In the past 3 months, it's up over 100%. And in the past month, it's up more than 50%. So in today's video, I wanted to revisit the stock and kind of talk about the main reasons why the stock has climbed in value in the past couple months and talk about my own opinions on the stock and if I think that the changes that we've seen in the overall stock price warrants me kind of changing my tune on the overall stock. I'd been very negative about it before, and in today's video, I'm going to talk if those views have changed at all. So before getting started, I do have to say that I'm not a licensed financial advisor, and this is not financial advice. Anything you hear in this video is just me giving my own opinions on the stock market, and you need to do your own research before making any investment decisions. Also, if you've been enjoying these videos, really appreciate it if you hit the like and subscribe button, as it would help my channel grow. With that out of the way, let's talk about this undervalued stock in some people's mind that has jumped 50% in the past month. So the stock that we're going to be talking about today is going to be Gamestop, ticker symbol GME. And so before we get into my own opinions, I'm going to kind of lay out the groundwork, kind of the reasoning why it's increased in price in the past couple months before I give my own opinions, because I feel like it'd be kind of cluttered if I organize it in a way where I kind of give one reason why it went up and then give my own opinion. So I'm going to give all of the positives for why it's gone up in the past couple months, and at the end I'm going to do my rebuttal and kind of respond to all of those reasons why the stock price has increased. So right now GameStop is trading for $9.56, and as of recording this on Tuesday, it is up 57% year to date. And in the past 3 months, it's up a whopping 133%. And so this was actually a stock that I identified when I was back home for the summer. I remember sitting on the couch talking to my dad. I was just looking at the Robinhood options chains, and I was like, I could see GameStop just randomly increasing in price, and it's actually done that. So let's talk about how that happened. So when you look at their last earnings report, that's usually where I go to see why a stock has gone up or down significantly in the past couple months. And so that earnings report came out on September 9th. And so the company's news report title says, GameStop reports second quarter results and strong progress towards strategic objectives. And so that sounds really positive. And when you look at the things that they highlighted from that earnings report, they see that e-commerce sales increased by 800% in the past quarter, and they generated $182 million in free cash flow. But when you take a look around and see what other people are talking about it, you see some problems, and the stock actually fell 10% from earnings. And so the number that really stuck out to me was that they had a 27% drop year over year in net sales. And so sure, you can identify the 800% increase in e-commerce, but it was a relatively small part of their business beforehand, so it makes sense that with the pandemic going on and many of their more than 5,000 locations being shut down at some point during the pandemic, it makes sense why their sales are up significantly there. But we did see a 27% drop in net sales. And then when you look at their main three areas, they saw a 20% drop in hardware and accessories, a 31% drop in software, and a 34% drop in collectibles. So the earnings report was not the reason why it's gone up. So let's find the two reasons mainly that it's gone up significantly in the past couple months. And so the first one is that there's been a lot of anticipation about the next generation consoles coming out. Normally it's like a 7 to 10 year cycle before the major gaming companies release their new consoles. And at this point, going into this winter, Sony and Microsoft are going to be releasing their next gen consoles. And then Nintendo's already released the Nintendo Switch, and I don't think they're going to be releasing a new version of that anytime soon, but the main ones are with Sony and Microsoft. So that's pretty exciting. So people are expecting that increase in video game demand is going to bounce back with the company, because once you get towards the end of a life cycle, it's kind of like, why would you buy last year's iPhone if you know that the next one's going to be coming out in a couple months? So that's kind of the reason why people are optimistic going forward. And so the largest individual investor in the company disclosed that he took almost a 10% stake in the company. And so when that happened, he said that he took a 9% stake in the company. The stock went up 26%. And then the next day it got disclosed that it was actually closer to 10%. And then it went up another 10% the next day. And so there was a lot of excitement around that. And one of the main things that this investor, Ryan Cohen, talked about was that he wanted to compete with Amazon for online sales after the company announced an 800% increase in e-commerce sales. So he wants to take GameStop and try to potentially move it away from being a brick and mortar store and more focus on the e-commerce side of it. So that's pretty interesting. So this investor, Ryan Cohen, talked about potentially taking the company private. And there's been a lot of speculation that he's going to have to go to the board of directors and negotiate a price that allegedly is going to be around $20 if that actually happens. And so he has significant cash after selling his old company Chewy to PetSmart for $3.35 billion in 2017. So he's got the cash. He has the largest stake in the company at this point, and he does need to get to that 50% mark to take the company private. So there's a lot of speculation on that. So out of the two reasons that I've mentioned so far, this is definitely the bigger reason, as investors are hoping that it's going to get up to that $20 price. And then if he does take it private, he's going to have to buy back all those shares at $20 a share. So at this point, that is more than a double in price from right now. So there's definitely a long way to go. But from its recent low of $4, the stock price has increased rapidly in the past couple months. So now let's talk about what I think about GameStop. And so from this news, did my view on GameStop change at all? No, not really. I still think it is not a great long-term investment, in my opinion, for my portfolio. It's one of those companies that I've looked at. I am a gamer. I am pretty well versed in what's going on in the gaming industry. And I could have said in the past 5 years that GameStop has been slowly dying, and I still believe that's the case. And so going to the first topic that was addressed for the main reason why it's gone up with the next generation consoles coming out, I will say that it's definitely going to be giving a boost to the company. I expect that probably the first quarter of next year and quarter two, we're going to see a very nice increase after the steep decline in sales from the pandemic are going to be counteracted by a larger increase in demand for video games and consoles coming from the next generation stuff. So there's definitely going to be a short-term boost in sales, but I don't think it's going to be strong enough to give me a reason to take a position in the company. And the main reason behind that is in the past decade, we've been seeing the switch from consumers going from the physical sales, getting the actual discs, to mainly going digital. And from the data that came out in 2018, so that's probably even worse than this data shows, at this point, only 17% of video game sales are physical copies anymore. And so that is a huge problem for GameStop, because the way that they make most of their money is by reselling old games. And so if you've ever gone into a GameStop and you've tried to give back a pretty recent game, they're not going to give you that much for it. And then they're going to hike up the price. Say you sold it back for like $8, they're going to sell it for $55. And that's how the company makes a lot of their money. And in the past decade, that market has been slowly declining. And we've seen better places to sell your games, stuff like Amazon, eBay specifically. And the demand for these used game sales, it seems like most people know that selling your games to GameStop is a ripoff. And so it's not going that way anymore. Also, Sony has announced that there's going to be a version of the PS5 that is going to be all digital copies. So there's actually not going to be a disc drive. Obviously, the main PS5 and new Xbox is going to have a disc drive, but we're seeing the main companies with Sony and Microsoft realizing that they can make a lot more money with selling their old games on their actual platform. And we've seen this with Xbox has the Games Pass, and then PlayStation has the PlayStation Now. These are subscriptions that allow you to play old games, and you can just stream them. You don't even have to download them fully. On Xbox, you do have to download them, which is a pretty big pain, but it's a way for the company to bring in extra money and kind of recycle these old games. And so currently I'm paying for the Games Pass, which I believe is $15 a month, and gives you a massive library of games that are a year old, 10 years old, and it just gives you so much more variety instead of having to go and spend full price on one individual game. And so the major companies are realizing that the resale market is something that they can control a little bit more, and it's choking companies like GameStop out. And so overall, while I think the next generation consoles will be a boost probably in the hardware sales and maybe in the actual game sales, I don't think it's a reason to consider this from my position for a long-term investment. And so the next thing I wanted to talk about is Ryan Cohen saying that he wants the company to compete with Amazon, saying that Amazon has a lot of problems in their search engine, where a lot of the third-party vendors are actually pushing the better searches out of the way. So people are not getting the best experience from it. And when I heard that, I was like, ooh, I don't like that. I don't understand why you would take a struggling company and then have them compete against one of the best logistics companies out there. If you want to be an e-commerce giant, I don't know how you can compete with Amazon at this point. They don't do anything specifically better. You don't go to GameStop to find out what game to buy. It's something where you do your own research and then you go there to actually buy the product. And there's no way that they can compete with the logistics that Amazon offers. They have their own planes, they have their own delivery vehicles, they have they have same day shipping, and GameStop is not going to be able to compete with that. So I think that's an absolutely ridiculous claim to try to have them go up against Amazon. And so yeah, I was not a huge fan of that. And then a huge red flag that I see with the company is that the 2 times that the company has gone up in price significantly is only because you have these well-known investors. You had Michael Burry and then Ryan Cohen taking stakes and being very vocal about them taking positions. And so it's never about the actual company recovering. It's only speculation about this well-known investor taking a position and talking about it. So it's never the company's recovering, they're doing very well. It's, oh, this well-known guy took a position in it. Maybe I'll take a look at it. So I think that's a huge red flag. One of the really interesting things coming with GameStop is that a short squeeze is very possible. And so when this happens, basically the whole idea is that when you have a very heavily shorted company, I think Tesla, GameStop is actually one of the most shorted companies out there. There's 58 million shares that are being shorted, and there's only 65 million shares outstanding. And so what that means is when you short a stock, you're borrowing it from your broker, you're selling it with the agreement that you're going to give them back their shares at a later date, and then a little bit of fees associated with it. And so you want to sell it for more than you're going to be buying it back for, and so you want the stock price to go down. And so if we have this situation where Ryan Cohen does try to buy 50% of the shares for $20 a share, there's going to be a huge demand, and he's going to have to buy up a lot of those outstanding shares. And so when the price goes up, the shorters are likely going to have to close out their position, especially if it's actually going to be going private. And so they're going to have to buy that back. And what happens when there's a lot of buying? The stock price continues to go up. And so we see this a lot with very heavily shorted companies, especially with Tesla. And there's a lot of speculation that this is actually going to happen with GameStop in the future. And so this is not something that I look at and go, yeah, it's an investment. This is definitely a gamble. I could consider maybe buying one call for the next 6 months or so and see what happens. But it's definitely more of a gamble and not an investment. This is something where you're only going on speculation and not based off of the fundamentals of the company. So I don't see a great opportunity for a long-term investment with this company. I just see opportunity for a gamble that could pay off, could be absolutely worthless. So it's not a company I would consider for any type of position. I think they're pretty doomed overall. I'm surprised that they have survived this long. After they cut their dividend completely back in 2019, I thought the company was going to declare bankruptcy in the next year. So far, they've managed to survive the pandemic, and it's going to be very interesting to see what happens with them going forward. So let me know what you thought about my analysis of GameStop, and do you think they're as doomed as I potentially think? Let me know in the comment section down below. Thanks for watching this video. I appreciate all the support, and I will see you in the next video.